All right, good morning, everyone. Good morning. If you're online, you're welcome to our Charter Quest CFA Open Day. For those of you who are here face to face, a steady welcome to our Open Day to Charter Quest, Rivonia, CBD campus. I see walking in. All right, so our apologies for those of you online. I know we're supposed to start at 9 o'clock. It's 10 past 9 now. So we're going to start in any event. Our profuse apologies. My name is Valentine, Valentine T. Sorry, let me. My name is Valentine T. I'm the CEO of Charter Quest. I will be guiding you through with the presentation. Our presentation is going to be there is part one, which focuses on why CFA, and how CFA works. I'll be leading you with that part of the presentation. There is part two of the presentation, which focuses on timetables, fees, study options, and study plans in case you wanted to start studying CFA. We would present you with how that part works in and all of it. That part will be led by the COO, Patience Mukundwa. I think she's on her way here. So I'm looking forward to presenting for about maybe 45 minutes, and then I take your questions if there are any. If you're online or face to face, I can take your questions. Patience Mukundwa can come in and present on the second part, which has to do with our timetable and fees and the rest. Okay. I'm presuming that you're all part of the CFA Open Day and you're all considering doing CFA for the first time. None of you have done CFA before, right? Am I correct? Not done it before. You're considering, is it both of you or is it just you? Okay. I hope, I see you got nothing warm there. The aircon is on, we try to keep it warm, but we also keep the windows open because of COVID. So it's not as hot as it could be. My apologies. Is that one behind you working? Are you sure? Because if it's not working, you can both move. I know that aircon is working. Okay, but anyway, all right. If you're also online, please note down if you have any questions. I hope that the purpose of an open day is to what the qualification is all about, how it works, answer your questions, and put you in a very strong position to decide if you wanted to decide to study with us or not with us, or if you wanted to do CFA at all. So if you have any questions that you prepared, please note them down. I'm trying to anticipate the questions and address that as I go along. But if there are any questions that you have noted down which does not come through in my presentation, I'll be very glad to deal with those at the end. Okay, so let's start first with the CFA itself. Most of you probably would have already read something on the CFA website about the qualification. Okay, and probably you're here to get a bit more insight. Okay, let's get to what we are really trying to achieve. You're trying to become a charter holder. It should be fairly obvious that the CFA is, unlike in accounting where you have different types of chartered qualifications, CIMA, ACCA, and all the rest. CFA is this, when it comes to investment and corporate finance, there's this one global qualification that the whole world, there's universal acceptance that, yeah, this is it. The benchmark for excellence in the area of investments and corporate finance. So if you are looking at getting to the very top of that particular field, you are looking at becoming a CFA charter holder. So let's say that is your vision, and maybe you might be wondering, but who are we? Before we even get into that, we call Charter Quest. Maybe I should just pause. I wonder, what does Charter Quest, we've heard the name Charter Quest, do financially qualified business. But what do you think this name means? Probably it's in charter you say, okay, maybe it's just a name. Does it mean anything to you? Want to try the city? Your name? Emil. Emil. Yes, you want to try?
I was that.
Okay, that's a very good. It's a school where one can study if one wants to become CFA and align their own method of studying towards becoming the charter. Yeah, somewhere around that. But I think I should broaden this to say the area of accounting and finance, you have different chartered accounting qualifications. The top, really the top four are CIMA, which is Chartered Management Accounting. There is ACCA, which is Associate Chartered Certified Accountant. There is CFA, which is Chartered Financial Analyst. There is CASA, which is Chartered Accountant South Africa. This is where we are right now. Okay, we are focusing on this particular one. The name Charter Quest simply means if your quest is to become chartered, okay, and there are very different types of charters. Okay, if you want to go broadly to management accounting, it is here. Into financial reporting is here. Auditing is more needed. Investments and corporate finance, it is basically there. So when you hear about our name charter quest, we're referring to your quest, your desire is to obtain any of those designations. That is what we do as a school. We partner with you. Our lecturers are all qualified members of those various professions. Since 2010, 2010. Yeah, so almost like 11 years old now in terms of our activities, running these various programs, and we've almost put, I would say, over roughly about 5,000 students who have either the CFA, the CIMA, who have graduated through ourselves. They're currently working now in the industry. We have a number of campuses. There is this small satellite campus which we use for CFA. And then we have our main campus in Rivonia. We have another campus in Parktown, another one in Pretoria. So yeah, that's basically who we are. But let's focus on why we're here today, which is aspect. You want to become a chartered financial analyst. Okay. I've just summarized here what are the top 5 jobs or practice types you will be looking at. I mean, this is just top 5. It doesn't mean that's where you necessarily aim. But it comes from research about the most popular roles that CFAs would play both globally as well as in South Africa. You find them here, okay? If we're going to ignore this, it's going to take you some years to get to that. Okay? The types of positions, chief investment officer or C-suite level, portfolio manager, research analyst, risk manager, consultant. Okay, those are the type of roles that you can expect to find yourself in. What are the sort of key areas that chartered financial analysts they operate in? They either operate in fixed income or in equity, in fixed income, private equity, derivatives, or real estate. Now, in finance, these two are generally regarded as traditional finance. Traditional on the basis that if you go to the balance sheet of a company, asset is equal to debt plus equity. Companies have to raise, generate assets. To generate assets, they need to raise finance, and the finance can either come from debt or equity. So when we talk about traditional finance, we are referring to finance as in bonds and equity, preferred equities, and all the rest. Now, so CFA spends an awful amount of time on this top 2, which is literally for a company, it is raising finance. For an investor, it is actually providing that finance. There are some rules and principles that regulate how you analyze this, and there's a whole range of things that goes on in that area. But those 2 is what is called traditional finance. They account for roughly, I'd say about 80% of what CFA charter holders they operate. There's also alternative investment. Some call it non-traditional finance. These areas. Okay? These are other areas that are growing very rapidly in terms of what CFA chartered financial analysts do. Some of them are in private equity, some of them in derivatives, some of them in real estate. So that's almost like some very high level summary of of what your vision and your aspiration to become a chartered finance holder could take you to. Okay, a number of things that uh, the question then is, what exactly would you be learning? Okay, if you join the CFA, okay, that is your vision. You want to become any of these, okay, for which you need a charter holder to easily get into any of these. I mean, these are just the top 5. But what does this really entail? Let me break it down by saying, as a chartered financial analyst, your core focus is about investment. Okay? You are trying to say, I want to become an expert in investment. I mean, investments can be short term, it can be long term, it can be medium term. But I want to be that go-to guy. If companies want to invest, I want to be the guys they talk to. If banks want to invest, I want to be the guys they talk to. If I want to set up my own portfolio of investment, I can do it. If clients want to set up their own portfolio of investment, I want to be that guy they're coming to. So that is literally what the qualification prepares you to literally become. But at the end of the day, investment is about 2 things: risk and return. When you put your money into something, you want to make returns. But there are the perils, the danger that you might not be able to make the return you look. So the whole CFA curriculum is just about those 2: risk, return, risk, return, risk, return. Now, obviously, it gets very, very complex, highly integrated as you dig deeper and deeper. Because every element of returns and different ways of measuring returns: geometric return, arithmetic return, harmonic return, there are different ways of measuring returns. If you go to risk, there are different ways of measuring risk: Sortino ratios, value at risk, standard deviation. There are multiple, and these different ways, they are trying to capture different elements of risk and return. Now, and they are best used for different types of investment, derivative. So what this qualification seeks to do is say, okay, investment is about risk and return. We will take this concept and build a curriculum which we're going to start over 3 years, just focused on risk and return. It might sound like, okay, I'll spend 3 years just studying just 2 things: risk and return. Don't underestimate what goes on there. Okay, so I have summarized to say, okay, as a charter holder, you are an expert when it comes to making investment decisions, okay, around risk versus return. Now, I've also put there a summary to say there are 3 types of decisions you're going to make, okay, as an investor. You're going to make a decision to long, to short, or to hold. By this, I simply saying you will have to make a decision to buy something. Long means you want to buy something. You want to take a position that allows you to acquire an asset or an instrument that will generate returns against which you might be exposed to risks. Short means you are taking a position to sell an asset, okay, so as to deconstruct that from your portfolio. Hold means you are taking a decision to keep an asset that you had already longed, you had already bought in your portfolio. You're trying to decide whether to buy more and incorporate it in your current position, or you're trying to decide whether to sell it off of your position. Ultimately, when you consider risk and return, it's about 3 things: should I buy, should I hold, or should I sell? Okay. So in one way, one could say this qualification is teaching you risk and return, but it's also teaching you whether you should buy assets or not, whether you should short assets, meaning sell them or not, or whether you should hold assets. Ultimately, if your risk and return configuration will come from the decision. If you go long when you should be short, it can be problematic. If you go short when you should be long, it can be problematic. If you hold the position when you should be selling the position, it can be problematic. So the real focus of the curriculum is how do I integrate the 3 decisions that investors have to make: long, short, hold, with the risk configuration, risk and return, so that when we marry them, we make the best possible deal. And you will not always be right, because as an investor, you lose money. Let's get that very clear. Okay? But you want to make sure over time Okay, the number of times you make money and the amount of money you make enough over time to compensate for any losses that you're going to. Sometimes market behave very, very nobody knew it was going to recover. So most of the risk models which have been calibrated and set up 3 years ago by investors could not have anticipated COVID. And therefore there's this black swan event that can usually come in and mess up your portfolio. So there would be those cases where you would make losses. But I can tell you there are other investors who have actually taken advantage of the situation and they created significant amounts of wealth. So ultimately, the qualification is teaching you how to navigate your way around these intricacies about buying, selling, holding, and risk and return. Okay, now, having said that, okay, the next thing that you'll be looking at is, okay, if this is what you're going to be studying, doing, okay, obviously, that entails you writing 3 exams. Okay, you would have to write 3 exams. By now, you know that CFA has 3 levels, 1 level, 2 level. So you're coming with him so that if he joins, you know it's a very hectic thing. It's a hectic qualification. You need all the support you can get for the next 3 years. If he says, I'm not going out for dinner, for dates, because I've got exams, you just have to understand because it's hectic stuff. So you'll be faced with 3 exams over the next, and obviously it used to be, let me clarify, you need 3 years experience. So even if you pass the 3 exams, it used to be 4 years experience. Last year, CFA changed to say you need just 3 years worth experience. So even if you pass the exams, if you cannot provide 3 years relevant experience. By relevant experience, they're referring to experience in the areas that relate to risk return finance. It could be experience in risk, research analyst, any experience that substantively involved you having worked with data, accounting related roles, audit related roles, investment appraisals related roles. All those, if you can demonstrate that I've got 3 years working with data, and the data I was working with was used, or my role was to process that data in a format that became helpful to my business or my employer to make business decisions or investment decisions, to be more specific. If you can provide that type of experience, then we can obviously sign you off as a chartered finance analyst. Okay, so that is the upside of the story where you're heading to. You're asking, what is long, short, and hold? What is risk versus return? What does it take to become a chartered financial analyst? What are these 3 level exams? Okay, so the next part goes back to the basics. You say, okay, let's see how the CFA has packaged the curriculum to help you get to that top-heavy future. Okay? First of all, my triangle here says there are 3 levels of the exams that we've said. Let me just outline the 3 levels. Okay, there's first of all level 1, there is level 2, and there is level 3. As you walk in, it is important that you understand what goes on these 3 levels. Some will tell you, maybe I should just put that up right now before anything. Okay, you will notice here at the top, the CFA is structured around some 10 areas. I'm going to come back to these 10 areas. Okay, I'm just plugging them now because I want to use the top there. Ethics and professional standards, area 1. Area 2, quantitative methods. Area 3, economics. Area 4, financial reporting and analysis. Area 5, corporate finance, equity investments, fixed income, derivatives, alternative investments, portfolio management. Okay. Now, CFA says these are the 10 areas. All the 3 levels, you'll be studying this same thing. Come to level 1. Level 1 is split into 5 different modules structured around 10 syllabus areas. Which are these areas? Okay, level 2, same thing. Level 3, same thing. But the question is, okay, if I'm studying the same thing, what then is different between level 1 and level 2? The only content which is exactly the same at all the three levels is the first one, ethics and professional standards. Ethics is ethics. There is no complex ethics. There is no basic ethics. Ethics is ethics. Okay, so the same ethics you find in level 1 is the same ethics in terms of content and everything in level 2 and level 3. Okay, so, but the other ones is the same, but the level of complexity changes. So what goes on in level 1? In level 1, now a lot of people write this exam that wonder. First of all, there's a big picture and there's a small picture. The small picture is how do I answer the multiple. What is level 1 all about? You understand what level 1 is all about. You see, if you don't know where you're going, any road will take you. You understand what level 1 is all about, it becomes easy to understand why the examiner is asking some particular question and what type of questions you can expect to find in the exam. Level 1 says, yes, arbiter, do you know and can you understand? If you have been studying for some time, you'll have learned that in the area of cognitive development, this is what CFA has done. There are 5 levels of knowledge as you become an expert in something. There's level 1, okay, which is called knowledge. There's level 2, which is called comprehension. There's level 3, which is called application. There's level 4, which is called analysis. There's level 5, which is called evaluation. So in other words, I can take the same concept called risk. I can teach you all that you need to know about risk. There I'm saying, can we define risk? Can we describe risk? What are the characteristics of risks? Are you with me? I'm only now teaching you risk at a level of basic knowledge. Definitions and characteristics and itemizing, they define risks. Okay, I can take the same risk, I raise it to say, okay, I'm now developing your understanding to a different level, now to comprehension. Okay. Why is this risk bigger than this risk? Why do we need to take risks? Why do we need to calculate different types of risks? I'm now moving your basic knowledge of risk to an understanding why we need or why risks exist. Comprehension is more senior to knowledge. You can know something, but you can't explain it. You can say, what's your name? Is Julius. Why are you called Julius? Oh, why I'm called Julius. It means you know, you can define, you can state it, but you don't understand why it is the way it is. Okay. So I can take the same concept of risk and say, okay, now we can define risk. We can describe risk. We can itemize risk. But do you understand risk? Why do people take risks? Then I move you to a second level of, which is called comprehension of risk. Are we there? I can come and say, okay, you may know risk, you understand risk. I can say, but can you apply risk? Because the fact that you know it, you understand it, doesn't mean you can apply it. I can give you a scenario and say, okay, here are 2 companies, here are different constructs of risk. Can you calculate the risk and can you tell me which risk is bigger and which risk is smaller? And why you say so? And what is the knowledge that embeds that particular type? Now, it's the same concept of risk. I've elevated it. Now, application. I can now give you 2 different companies. You can compare. You say, no, this company has a bigger risk. This one, your knowledge of risk has grown from knowledge to understanding is now at the level of application. Makes some sense. But we still talk about risk, the same thing. Okay? I can come and say, okay, I can build that again further to say, okay, I can see you know risk, I can see you understand risk, I can see you can apply risk, okay? But here's the problem. When risk occurs in a business, it has many different sides. Risk can be viewed from the point of view of the shareholder, from the point of view of the customer, from the point of view of the investor, from the point of view of the CEO. We all can see the same risk. What we see as downside risk, I can put two economists in a room and give them the same monetary policy. One will tell you the rand will appreciate, the other will tell you the rand will depreciate. When they all look at the same data, I don't know if you get what I'm saying. So the same concept of risk, you get to a point where what you know and understood and you thought is how it is applied. Find that that same concept has many different legs. 15 different people will see it in 15. If you ask risk from the point of view of a CEO, how you describe and characterize it is different from how an investor will characterize it, different from how shareholders will characterize it. So I can then say, okay, I see you know risk, you understand risk, you can apply risk, but can you analyze, if I give you this risk, can you break it down and show me how an analyst would view it, how an investor could view it, how a shareholder could view it? Can you see what? Now, I'm basically trying to find out whether you can get out of your box and say something can work for AXA but will not work for Alexander Ford. Something can work for Alexander but will not work for Goldfield. Something can work for, you get what I'm saying? It's a higher level of application. Now, when you enter that level, you set up, enter what is, now you can analyze. Now, in the same risk we study in level 1, we're just changing the complexity of this. In level 5, we come and say, okay, I can see that you know risk, you understand risk, you can apply risk, you can analyze and see from different. Can you solve this risk? Now you're entering the final level of evaluation. Now, you cannot come up with solutions. You need knowledge, you need understanding, you need to be able to apply, you need to be able to analyze before you can say, yeah, this is what we must do, this is what we must not do. Okay, so we've just said there are 5 levels of knowledge. What CFA is the following. This is what is called the Bloom taxonomy. CFA, they've taken these first 2, knowledge and understanding, they've embedded that in CFA level 1. They've taken application and analysis, they've embedded that in level 2. And they've taken evaluation, they've embedded that in level 3. So to summarize, what CFA is doing is saying, we'll take these 10 areas, just like I took risk, and I keep elevating risk. You see, we'll take these 10 areas, we'll package it in level 1 and say, when we're in level 1, in each of these 10 areas, corporate finance, quantitative methods, derivatives, and each of those areas, when we introduce it in level 1, we are only interested in 2 things. Do you know and do you understand? Makes sense? 2 levels. Level 1 is about the knowledge of each of those areas. Now, in each of those areas, there are a lot of tools there. Tools could be how do you calculate return, how do you calculate risk, how do you calculate different ratios, and different types of numbers that are calculated. Just to help you understand risk and return. Those are the tools you are learning. But the tools are my only interest is, A, do you know the tools? Do you understand why we are calculating it? Now, obviously, our role is to take you through all the tools and techniques in here. In ethics, there are tools and techniques, or we can call it professional standards. They give professional. the standard of professional competence for audit, for investors and all the rest. You're going to learn that how do you behave? The focus there is how do you behave yourself in a world where the capital market affect us. We live in a world where those who have the money, they don't have the wisdom how to deploy the money. You know, that's the reason why you want to be analyst. The investors have the money, but they don't know where to deploy the money. They need you as the analyst to tell them, deploy it here, buy here, sell here, hold here, and that's what you pay. Now, so you're living in a world where investors trust. All they have is trust. All you're selling is your recommendation. Your expert opinion says buy now, sell now, hold now. Now imagine you tell an investor to buy and he deploys 10 billion or his investment goes wrong. Doesn't look good for your reputation and all the rest. So in other words, because trust and integrity is at the very center of what analysts do to make sure that their opinion is credible. CFA has developed a very comprehensive set of guidelines, which they call the Standard Professionalism. So throughout here, it is teaching you how to behave yourself in the profession. There will be all types of conflicts that will arise. Conflicts around your relationship with your employers, conflicts around your relationship with your clients, conflicts around your relationship with regulators, conflicts around, you'll be so much conflicted. It is teaching you a set of broad standards, how to identify conflicts, how to manage the conflicts, and how you should behave yourself to ensure that the ethical dilemmas that come from those conflicts don't put you in the wrong position. So that's what you're learning there. Okay, they're all packed here. In quantitative methods, you're learning statistics. Let's be clear. Some people are wondering what you're learning the statistics. Okay, how investors, their core function is to collect data and to make decisions. And by data, we just talk about opening the financial of a company and analyzing duration. That is 100% of what analysts do. Analysts monitor the macroeconomic environment. They collect data about interest rates, exchange rates, stock prices, and all these various forms of data. They need to be able to harness that data, and summarize that data using different methodologies that some of which you have studied from your previous study. You could call them flow charts and bar charts and pie charts and graphs, Cartesian planes, and they're all different ways, okay, frequency, histograms, and different ways of representing data, summarizing, quantifying data. Okay? Now, that's what you'll be doing here as part of your quantitative methods. Okay? Obviously, there's economics, some of you learned from your previous studies, microeconomics, macroeconomics, you're going to learn functions like market structure, demand, supply, interest rates, exchange rates, and all the rest, how those interact to determine success or failure in the economy. This is what most people are aware about. It's the financial ratio analysis, balance sheet, income statement, profitability. That's what you're doing here. Corporate finance, you're learning about debt versus equity, as we said. How do you calculate the cost of debt? How does the cost of debt impact the bottom line of the company? Equity, what are the different types of equity investments that you can take? What is the cost of equity? Now, I could go on, okay? Here you're talking about the equity market itself, stock market, equity market indices, all share exchange, all the various indices that are used to track what is happening in an equity market. That's what you're going to study under equity investment. Fixed income, my goodness, some people just go there and say, if there's one area where some people just say, I think I'm going to give up on this series. Okay? They'll introduce some very serious calculus. If you have not done maths before, there might be a need to update your maths. There is convexity curves and convexity diagrams, convexity effects, how bond prices oscillate with interest rates and all those things. There's some really, really serious, but they are very interesting. I mean, if you go through that, you understand. You can just say, okay, I think I see where the market is heading to. I see where interest rate cycle is going to be heading to. Your ability to hold and identify opportunities and gaps becomes very sharpened, much as it's very difficult. Okay, there is also derivatives, the tools and techniques that I'm sure you've heard about. Derivative instruments are contracts which are bought to take positions on what is happening in an underlying market. For instance, futures contracts, option contracts, swaps, and all the rest. These are actually riskless investments that you can take to mimic and mirror what is happening in the real investment market. So, in other words, you want to buy a share, but you don't have the money on the share, but you want to profit from what the share could have given you at the door. You can buy a call option on the share. Cost nothing. Okay, it can give you the same type of returns as the share, but it has some certain risk. They are called derivatives because they derive their value from what is happening on the underlying market. If the underlying market stock price goes up, the derivatives value also is going to go up. But now there's always a danger that that upward movement in the value of the derivative versus the market, it might not match each other, and therefore you could end up not getting all the returns you would have had you throw your money in the real market. So there are some very interesting things going on there. What are derivatives contracts? How are they valued? How are they measured? What are the risks associated with those? If you take a position in those, how does that help you? And then we only talk about alternative investment. What other things like real estate, commodity, gold, coins, all the other types of investments which are emerging, which are not the traditional debt, you cover them here. Portfolio management puts it all together to say, okay, when you do all these, you decide to buy, sell, and hold. If you buy, you are buying to put in a portfolio. Sell, you are selling out of a portfolio. To hold, you're holding in a portfolio. So there are some principles that govern how you plan a portfolio, how you construct a portfolio, how you retire a portfolio, how you decommission a portfolio. So the final part is, okay, here's how you bring all these things. You can have 30 securities which all look well. If you put them all in one portfolio, it might look bad. You could have 30 securities which all look bad. If you put them in one portfolio, they might look good. How do you transition all the tools and things you've learned in each of these tools that went to buy and to build a portfolio that becomes sustainable or successful over time? Now, having just very high level talk to what happens in each of those areas, all that CFA then does is say, okay, we will take all these 10 areas. When we get here, we will call it Introduction to Finance. And only focus on, do you know about this? Do you understand it? Do you know when we get to quantitative methods, we introduce it. Do you know about it? Do you understand it? When we get to corporate finance, do you know about it? Do you understand it? When we go to portfolio, do you know about it? Do you understand it? So things are quite basic. Yeah, well, it sounds basic, but I'm sure you heard about it. That is not okay. It may sound basic. You need a school that really understand what goes on in there and can really break it down for you in an exam focused mind. So, okay, this is the tool, this is the meaning, this is why, and this is how you answer an exam question. Now, most of those tools, if you know them, you don't know how it is used to answer exam, it can really throw you off. So, what we do as a school is to literally take that holistic understanding and knowledge of what the examiner is looking for at each level, develop a curriculum or a teaching methodology that responds to that knowledge and that comprehension, how to use it to answer multiple choice questions at that level. Okay. Now, so that is what goes on here. Now, once you pass this, okay, almost says you have mastered the tools and techniques that are used to compute returns. That's all he's saying. Because remember, all the three levels of risk and return. So everything we are studying, they converge back to but what is the return? Buy, will you hold? So level one simply says, okay, I have a foundational knowledge and competence. I know and I understand a broad range of tools and techniques that are useful in making investment decisions. That's all level one means. Okay. You realize that you've learned so much, but level 1, you realize that you know so little. Because every concept you learn, as soon as you grasp it for level 1, more questions are open, which can only be answered in level 2. You say, okay, yeah, but for level 1, we end here because we assume that this is held constant, this is held constant, this is held constant. But in the real world, these things are not held constant. When you get to level 2, we relax them. We take what you already knew and understood from level 1, we deploy it now in level 2. Say, okay, you pass level 1, you master this, but when you start in level 1, we ignore this, we ignore this, we ignore this, we ignore this. So now, in level 2, we say, okay, can you apply it? Because when you move from the textbook to the real world, a lot of things go wrong. So you know that. Okay? What goes on in your textbook and what happens can be two different things. So when we get to level 2, we're now saying, okay, everything you learned in level 1 was just a broad set of knowledge and understanding of everything without real focus on how that works in practice. Yeah, there was a bit of application, but we did not really take it to deploy that into practice. Level 2 says, okay, level 2 is called asset valuation. Okay? Now, all investment decisions, you cannot invest in something you can't value. So whether you want to buy, you must value it before you buy. If you want to sell, you must value it before you sell. If you want to hold, you must value it before deciding whether to. So all investment decisions, they culminate in valuation. Now, valuation itself is a very, very messy. Yeah, well, the value of an asset is the present value of its future stream of income. You'll be told that in level 1. When you get to level 2, you're told, oh, well, level 1 was correct, but it is not enough. There are times when you cannot find the forecasted present, you cannot find the present value of those future income, and therefore you can't get to the value. So what do? You find that when you get to equity, there are different ways of valuing equity. The preference method, the earnings method, the free cash flow method. As soon as you come from equity, you get into fixed income. There are different ways of valuing fixed income. Arbitrage-free valuation, forward curve valuation, credit curve valuation. Now, level 2 says, okay, let's take what we have learned in level 1. Let's go into real application to see how these are packaged to value assets. So now we are no longer interested in whether you know or you understand. That is a given. What we want to know is when you take that knowledge and understanding to deploy that in the those real things that analysts are paid. Every time you open the financial papers, they'll tell you the rand is overvalued, the rand is undervalued, Bitcoins are overvalued, this one is undervalued, bond is overvalued. The market moves on the basis of what is overvalued and what is, and your ability to predict and assess that value and determine where it will go is a key part of whether you're going to succeed as an investor. So level 2 takes that understanding into so much depth. So by the time you come out, you say, oh, I now see why fixed income analysts, they tend to say these things all the time. I now see why currency experts, they are able to see what's going to happen to the rand. I now see why real estate guys can determine what's going to happen to house, because you have spent all your time valuing different types of things. That's all that's going level 2. Let's value real estate, let's value commodities, let's value Bitcoin, let's value equity, let's value. Now you go to each value, you see, yeah, but there are 15 different values you can get to. Which one is wrong? Which one is right? Which methodology did you use? Which one did you not use? That is all level 2 is trying to do. Okay. Now, the presumption is that your valuation decisions would guide whether that asset should be bought or sold. If you see that it is currently undervalued, it makes sense to buy it. Because if it's undervalued, it means it's cheap. If you buy it and put it in your portfolio, by the time the market recognizes true value, the value will rise. If you find that it is currently overvalued compared to the market, I have to recommend that issue. Okay, so this level then summarizes how to deploy the tools and techniques, how to navigate the real world complications. Because each tool and technique has an embedded set of assumptions. The role is to check whether those assumptions back the tool and technique, whether they are valid in the real world. So you say, okay, we can value this asset using this subject to the following assumption. Okay, this is the situation. Assumption number 1 is valid. Assumption number 2 is valid. Assumption number 3 is not valid, but therefore this method is wrong. Valid, therefore this method is valid. Now, when you come up this level, you write obviously another exam similar to level 1, multiple choice just like level 1, morning paper, afternoon paper. Now, unlike in level 1 where the questions were like one sentence, answer true or false, choose the right answer. Okay? Very brief statement, you have to choose the right. In level 2 is now it's a whole story. It's a longer scenario. AB is an analyst in this company. They have just been appointed to do 1, 2. The data about this, the boss has asked 1, 2, 3. Tell you a longer story. Because level 2 is trying now to synthesize everything you learn in level 1 and incorporate a lot of real world variables. See how you can navigate your way around those variables and finally say, okay, this is what we need to do. So, but ultimately, both of them are still multiple choice exams as it were. Okay, so when you pass this level 2, obviously you cannot call yourself a charter holder, you finish, and you can't call yourself a part qualification. But that level 2 is simply saying that I can apply and I can analyze any financial investment related issue presented to me. I can analyze it. Now, obviously, you can't apply unless you have this. So the presumption is that you know it, you understand it, and therefore that's why you can analyze. And therefore, I can tell, or at least theoretically, I can tell whether an asset, if I check currencies, I can tell more or less whether the rand is overvalued or undervalued. If I check fixed income, I can tell more or less whether it is overvalued or undervalued. If I check commodities, because those are the assets, isn't it? It's teaching you how to value those as currencies are assets, bitcoins are assets, commodities are assets, equities are assets, fixed income is assets. So all level 2 says is, I am equipped now to look at any asset and what its true value should be. Okay. But what that then means is, as a CFA charter holder, you can buy the assets, fine. But the assets, there's no investor who picks you. When you invest, you don't pick one thing and invest. Investment is a portfolio. Assets, even when analyzed separately and they look good, like I mentioned, when put in a portfolio, one, if you just put all your money in one asset, it's problematic. Anything can go wrong. So no investor will put all his money in. So if you find 10 banks, only one is doing well, it doesn't make sense to put all your money. So level 3 begin to say, okay, I can see you can value the asset, I can see you can tell when to buy, when to sell. But remember that buying and selling is also a function of what is already in our portfolio. Even though at the asset valuation level in level 3, buy. But you might buy it and put it in a portfolio, we can create other problems. So level 3 takes the dynamics of valuing, buying and selling and say, okay, when we buy and we bring that into a portfolio, let's also take into account how that asset would correlate with the other assets. At the end of the day, you are measured on the basis of, when we talk about risk, we talk about the risk of the portfolio, not the risk of the asset. Are you with me? As an investor, you're managing a portfolio. You're in a portfolio management, a portfolio of assets. Now, of course, the risk of a portfolio reflects the risk of the individual asset. There's no question. So in level 1, level 2, you have gone into the risk of the individual asset. But you have also been introduced to other concepts like correlation coefficients and covariance and all those things, which tells you, although there is risk, there is covariation. So risk can look good, but covariation can look bad, and therefore it's got these particular implications. So level 3 then says, okay, when you say, can you build a portfolio? Now, in the process of building a portfolio, there are different. There is what is called security selection, stock picking, top down, bottom up, quantitative methods, factor-based methods. There are different investment houses will tell you our approach and methodology of building portfolios is bottom up. By that, they are saying we start by analyzing the stock and then we analyze the environment for which it is. That is what it means. And often we tell you, no, we prefer top down. We start by analyzing the macro environment. That tells us which stocks to pick. That is how we win. Some will tell you, oh no, we are more factor based. Meaning we'll do a statistical regression to look at all the factors, value, price, momentum, and then pick stocks on the basis of those factors. Another one will tell you, no, we are security selection. We will start by identifying a clustering of securities, and then despite the security concentration, we will zoom into those areas. Now, when you get to level 3 takes it, okay, forget about everything you learned in level 1. That's the process of understanding that there is no single investment. There are portfolios. Investment is about portfolio. So, how does top-down work? How does bottom-up work? How does systematic work? How does quantitative work? What are the pros and cons? And each methodology, they go back and say, let's show you, if you want to do top-down for equity, here's how it works. If you want to do bottom-up for equity, here's how it will work. If you want to do top-down for fixed income, here's how it works. So level 3 literally introduces you to the different approaches to building a portfolio. That helps you to go back and question some of the things you learn in level 2. This thing in level 3 is wrong, man. But it was right at that point. When you did level 2, it was right. When you get to level 3, there are also certain things you learn in level 1, which was right in level 2, no longer correct. Now, by the time, obviously, you write your level 3 exam, you are an expert. You've gone through it, it has also gone through it. You can engage on finance at the most sophisticated level. Obviously, there will be certain areas that you're going to find Peter. Maybe if you come to do CFA, you're already working in corporate finance. You might find corporate finance easier for you. Okay? The other areas that you're not working, you might find them very fun. But a curriculum is structured to make sure when you finish at the end of the day, you literally can engage, and obviously, so that is almost like a summary. So obviously, you finish here. Okay, I'm sure you're aware that you can now write level 1 exams 4 times a year. Okay, you can write in February, or you can write in May, or you can write in is it August, and then in November. Okay, so 2.5 hours, 2 hours 15 minutes in the morning, 2 hours. It used to be 6 hours, it's now 4.5 hours. 90 questions in the morning, 90 questions in the afternoon. Multiple choice. You go sit one day, you write in the morning, write after you come out. 10 weeks after you get your results. Now, although you can write quarterly, if you fail, you have to wait for 6 months. So you can't write in February and then don't make it, you think I can just write in May. If you write in February, you don't make it, you must wait till August. So there's a minimum waiting period of 6 months. So effectively, you only have 2 attempts in a year. Let's put it that way. Because although there are 4 exams, you only have 2 exams. Now, at the level 2, you have 2 exams a year. It used to be just 1, every May and every November. They are already 6 months apart, so that's fine. If you fail in May, you can write in November. Okay? Why am I be talking if you fail? I'm sure you're not planning to fail. Okay, at level 3, same thing, May and November. Okay, if you want to know few things, this is pure multiple choice, also pure multiple choice, short scenarios plus multiple choice question. This is long scenarios plus multiple choice question. Level 3 is split. Half in the morning is constructed response, then multiple choice. By constructed response, they'll give you a scenario just like level 2, but you have to literally, unlike level 2 where you read the scenario and then you pick the answer. In level 3, they give you the scenario in the morning, but without the answer. You have to come up with the answer, so you have to explain why you come up with that answer. So they call it constructed response, so it's almost like a number of, so there are a lot of people who survive level 1 and level 2, and then they struggle with level 3. Because level 1 and level 2, remember, sometimes you read, you forget something. If they show you the option, you can remember this is the answer, isn't it? So level 1 and level 2 sort of lend itself to that, where, okay, I read about this aspect, okay, by governance analysis. I know that it's got, 2 pi squares. I'm not sure it's 2 or 3. Then they give you the option, oh yeah, it's 3. But now in level 3, they don't give you those options. You have to bring it up yourself. And you have to explain why you have that. So you just have to type. So that's what is called constructed response question. Then the afternoon is multiple choice, very similar like in level 2. Now, obviously, I'm not going to go through every single one. I need to wrap on and then give you a chance to ask questions. This next table is just talking about the weight. I don't think it's too much detail. The weights are not the same. For instance, you get to level 1, the 2 biggest weights: ethics and financial reporting. Okay, you have continuing method is 10%. This one is 10%. All of these, they are almost the same. Once they play very small weight. As you move to the top, when you move to the top, you find some of these areas which have a small weight. They start going higher weight now. Okay? This one, it has a high weight, it remains a high weight. This one has a high weight, it remains a high weight. As you move towards level 3, you start finding some of these areas, okay, they are dropping. This area, you see now, fixed income is not a big issue. Portfolio management is not a big issue. If you look at here at the bottom, only 6% on portfolio management. As you're getting to the top, 40% on portfolio management. Look at here, fixed income, only 11%. As you're getting to the top, is now getting. Now that reflects the tilt of the emphasis, because level 1 and level 2 is more about the tools and the valuation, and level 3 is about putting it in a portfolio. So therefore, when you're in level 1, very small percentage attributed to portfolio. So, okay, but remember that these things you are buying, they will end up in the portfolio. Level 2, okay, remember again, they'll end up. Then level 3, portfolio now becomes 40%. Okay, exam now is about portfolio. That may mean everything you learn in level 1 and level 2 is no longer valid. Obviously, some of them will still be valid, but some of them now require you to integrate in, because you have to integrate a number of things to build a portfolio. Certain things which, when you look at in isolation, level 1 and 2, they were correct, they are now no longer correct because you are integrating them with many other things. Okay, so that's in essence, guys. I think that is a rundown of what you are looking at. I hope that my goal was to really capture, what the CFA is all about, so that, because sometimes you must get this type of insight before you decide whether you even want to do it. it is hectic, but if you know this, you can say, okay, yeah, I think this is what I want to do. Or I thought it was this, not what I wanted. So you don't want, it costs a lot of time, a lot of money. You don't want to spend that time unless you're passionate about it. You see and say, yes, this is what I wanted to do. But I've got no doubt. But when you have that type of passion and commitment, when it hits, when the process starts, because it is difficult, you're going to take months attending classes to prepare for one level. You're going to your head level one is about 560 learning outcomes. By the time you go through that, you'll be so daunting. But if it is daunting and it is something you wanted to do, you've seen the light, yeah, this is what I want to do. It will be daunting, you will keep going because it needs a lot of will and a lot of resilience, ultimately to pull up. So it was my hope that this presentation would, I know if you're online, would give you some idea. That's the purpose of open. This is what CFA is really all about in a very high level nutshell. The next issue for you is, do I really want to do it? If I do want to do it, okay, how can CharterQuest assist me, which is what my colleague is going to be presenting. But let me pause here and give you the chance to ask any questions on the part of my friend. Please, no question about timetables and fees, because my colleague is going to be presenting on that. After this day, you can ask the questions. I'll be here to also ask. But maybe just questions that arise from my first part of it. What CFA is all about, how it is structured, where the qualification it could be heading you to. So are there any questions on that part? Yes, I'm going to start. Leseko, I hope you're monitoring the guys online. If there have been some questions, I'd like you to, I'll start online. Take one question online, answer it. Take one question from those of you who are facing, answer it. But if you don't have questions face to face, I'll go back online. I'll just keep moving until I clear all the questions. Okay, let's start with online people. Are there any online questions? I understand there are about 7 people online. Are there any questions? Who's monitoring? Let's go.
Hello, can you hear me?
Yes, I'm done with my part. I want to deal with questions.
Sorry about that. So we have some burning questions that came from the questionnaire. The first one is, how come CFA does not grant exemptions?
How come CFA does not grant exemptions?
Yes.
Maybe the question should be, how come other professional bodies grant exemptions? Okay, I guess this person who is asking is SIMA, the other professional bodies, they do grant exemptions. So you naturally expect CFA also to grant exemptions. I think the answer is, this is now my opinion. Okay? I don't think CFA has anywhere documented why they don't grant exemptions. But this is my opinion as to why I believe they're not granting exemptions. When you look at finance and investment, okay, globally, the CFA Institute is a monopoly. What I mean is, if you're the only guy that is known around the world for doing something, you call the shots. There's one, there are other ones around, but 90% of the global investment industry, all the stock exchange, except that CFA. And therefore, everybody wants to, and if everybody wants to do it, why should they be, the demand is more than the supply, why should it be giving you exemptions A, B, and C? Unlike other professional bodies, like if you go to accounting, there are different accounting, there's CIMA, there's ACC, they're all competing. So it's a very fragmented market. So sometimes the professional body uses exemption as a tool to attract students from, because if I don't give more exemptions, technically students will end up with a professional body who gives more exemptions, because everybody wants to finish as fast as possible. So if you've got 14 modules, they exempt you from, I'm going to take this one, it's going to help me finish. So students sometimes need exemptions to finish the qualification ASAP. Now, so if you are asking how come CFA doesn't do it, it is because they don't have competitors. If you're not going to, if you want to be in the field of finance and investment, not CFA, what? What else would you be doing? So they don't have competition where they believe they have to give you exemptions to attract you to the program, or else you can join other programs. That's the first thing. Okay. The second thing that you need to keep in mind is you go to a lot of universities. You can count universities at random. All universities will have a diploma of accounting. But you hardly hear about a diploma of investment. So most universities, they don't recognize investment as it is seen as okay, it's part of accounting. So when you do accounting or whatever, you do some time value of money or whatever. Okay, I'm not saying all universities. There are some universities that are big. Have you ever heard about a BCom investment? They are rare. I'm not saying they are not there. They are rare. But BCom accounting, BCom accounting, different types of. So because universities have long established accounting, and a lot of people have accounting, when you want to apply to any of these professional bodies, you can ask for exemption. But how many people really have a BCom in investment management? Now, CFA has taken a view that investment is a profession on its own. And therefore, the things you need to learn to codify that body of knowledge, to the extent that a lot of universities have not codified it and are running undergraduate degree programs focused on investment. I'm not saying all, many universities don't. So, the exemption will come from what then? Because if you are being exempted, you are being exempted on the basis of something you studied before. But what you studied before is not a BCom in investment, it's BCom accounting. So for starters, when people go into CFA, they come in with degrees in IT, degrees in mathematics, degrees in accounting. Okay, you may argue that what if I have a degree in investment management? So surely then I should be given exemption. But you just have 2%. It's 2% of the people coming have that. So from a cost benefit, CFA say, okay, you know what? No exemption. A, you don't have anywhere else to go. We are the global standard. B, there is a significant minority of people who would require this exemption. The cost of administering an exemption program is not worth it. So everybody, we must start from the foundational level. The third thing you have to look at is, if you understand what is going on here, I kept talking about there's a certain degree of learning and unlearning. Learning and unlearning. There's a certain continuity in the tools and techniques, how they are translated into. So CFA is legitimately worried that if we exempt you from this, we're not so sure that you really understand those tools and techniques at that level of finer detail that we need you to grasp to cope with what is coming in level 2. So, given the way it integrates and it's the same 10 areas just being integrated, we want to be sure that you come in, you start from the very beginning so that you don't then end up with problems at the next level. So that is my own, this is not a CFA answer, that is my own understanding of why I think CFA legitimately does not grant exemption. I will never consider granting exemption. I hope I've answered your question. Next question. If there's a follow-up to that, you can always pose. So I'm sorry if you want exemption, you can't get it. Sorry. Ask keys. Next question.
How many years work experience do I need before getting signed off?
You're watching the screen. I've just underlined the answer. It used to be 4. If you have just brought that down to 3. 3, you can get that before, during, or after passing the levels. So while you are studying, if you have a 3 experience, you can submit it. Even before you start studying CFA, if you can still get it after. But these are 3 years experience that should be relevant, which you can submit to also become a CFA. If you submit it now, you'll be called a member, but not a chartered member. You'll be called a member of the CFA Institute. Just says you have met the work experience requirement. So you can't yet call yourself a chartered member. Then when you pass the 3 exams, then you can call yourself a chartered member. So in summary, it's 3 years experience you are looking at. Yes, next question.
The next question is, how many years does it normally take to finish all 3 levels?
Okay, well, I just answered that question by saying, if you're looking at the board for the person who asked this question, let me answer in the following way. Okay, there used to be the past, now there's the present. If you look at this, okay, let's say you can write your exam in February. Look at this. You can write your exam in February. The next May, you write level 2. The next November, you write level 3. So you can follow this path, February to May in the same year to November. So as it stands in theory, okay, you can finish it in 18 months. But let nobody fool you, okay? 80% of people who start CFA want to finish it. Less than 2% do finish it if they finish. So, A, you can finish in 18 months. That assumes you fail nothing, you do it, you pass it first time order. I can tell you from my experience, okay, you need to work with like 2.5 to 3 years. Not 18 months, 2.5 to 3 years. Okay? This is now the average person. The average person maybe passes level 1 first time, fail level 2 and passes it on the second attempt, fail level 3. Because remember, less than 10% of people pass all the levels first time. Are you with me? When you write level 1, you pass first time, level 2. So, and these are not average people. These are exceptional. These are guys who are working in finance and they've been eating and drinking this. They can sleep and they don't even need financial calculators to get to answers to this. They write the pass. So when I say work around 2.5 years, I'm saying a very experienced guy who is very, very educated in finance. Let him be the one to take the 18 months, which is the shortest possible path. Then add another 1 year to your 18 months. Then I'm not that type of guy, I'm an average guy. So if I add another 1 year, which is 2 cycles of 6, that takes you around, 2.5 years. Or you add another 18 months to his 18 months. That's why I'm saying, and I've seen that from experience. The average person takes 2.5, not 18 months, not even 2 months, not even 2 years where you can say, let me do 18 and add 18 months. This is serious business. In any event, our experience shows that to fully prepare a student to write the exam and put the student in the position to pass first time, we need 7 months. We normally run classes once per week, either over weekends or in the evening. We need 7 months. Now, if I'm going to need 7 months to prepare you to write level 1, it means you almost need 9 months to pass level 1. Because 7 months is the period during which I am teaching you and taking you through the test. 3 months is the period which you do the revision. Are you with me? So if I start by saying, okay, I teach you for 7 months, you need 2 months to prepare, almost 9 months. Multiply 9 times 3. Say if I take 9 months level 1, 9 months level 2, 9 months level 3, that is still taking me back to about 2.5 years. So that is your best bet. We've had people who say, no, I want to finish this in 5 months. We don't rush it. Okay, we used to rush it and we can see it doesn't work. We rush it, you pay, you fail, you come back. So we don't rush it. If you want a school that can prepare you in 4 months, you can find another school. We need that 6 months. So work on that and you can get your sense how long this to complete it. But yes, in theory you can do it in 18 months. Those are the timelines. Okay, yes, next question. Next question.
The last question is, why is there a minimum waiting period if I fail my first attempt on the exam?
Why is there a minimum waiting period if I fail my first exam?
In my first attempt on the exam.
Okay, I see why that question is coming. First of all, okay, sorry, let me put up this thing before I continue. Why is there a minimum waiting period? Okay, it's hard to explain, but however, let me explain. For the last 30 years, here's how CFA has run the last 15 to 30 years. Level 1 was only written in June or December. Level 2 and 3 was only in June. Until last year. Okay. Experience was 4 years. They brought it down to 3 years. Okay. So in the past, you only had, if you failed in June, you can write in December. That was a 6-month waiting period for level 1. For level 2, if you failed in June, you have to wait 1 full year and only write the following June. So technically, until last year, level 2 and 3 was literally, assuming you pass first time. Okay? If you write in June, you can only write the following June. So if you fail there, you have to wait till the following June. So assuming you pass first time, level 1 and 2 will take you 1 year. And then this could take you 6 months. Pass the end of this exam. Okay. Now, what they've tried to do, because there are now 4 exams here, when they changed this thing last year to 3 years and they made multiple exams, people were taking now here almost like 5 years to finish CFA. Because if you fail in June, you have to wait till the other June. If you fail again, you have to wait till the other June. Okay. Now, the revision of the program where you now have 2 exams, you can either write in May or November. In May again or in November. There's been a lot of cry that previous CFA people had already finished CFA. They felt they studied when it was so difficult. 4 years, now is 3. 1 exam per year, now is so many. So there was a lot of cry. Now, this is my opinion, that it looks like the standards for CFA is coming down. It's now easier. People can write many more exams in the past. Now, if you're asking, why do you have to make that waiting period? First of all, the waiting period only happens in level 1. Although there are 4 exams, it says if you fail here, you must skip 1 before you write, so it's 6 months. That was designed to bring you back to this same seat, because in the past there were just 2 exams every 6 months. Okay, so in the current there are 4 exams, but they are still trying to maintain the old standards, which says there are 4 exams, but if you fail, you have to pause. They want to still make sure that you can only still have 2 attempts per year, so that it doesn't become too easy for everybody to. That's my opinion. But B, CFA is taking a view that if you fail, it means there's something fundamentally wrong with your learning, which you cannot fix in 2 months. I don't know if you get what I'm saying. Because if you fail, CFA believes that you can't fail and you fix it. You need to go back to the drawing board. Because the next exam is the next quarter, 3 months after. The view is that you fail now, in 3 months' time. Take a step back, reflect why you failed, look at your score results, go back, do practice. So, other than wanting to maintain the 2 cycles, they're saying, because level 2 and level 3, in any event, they are 6 months apart. On the basis that if you fail level 2, you have to wait 6 months to re-prepare to come back. We should equalize the standard with level 1, so you can have ample opportunities to go back and recalibrate to come back and perform. Okay, so that is my again, that's my own analysis. Okay, any other? Just so you look like that was the last question.
No, that's the last question, Mr. G.
Okay, good. How about you? People are here. Any questions? Anything that you came here wanting me to clear? I haven't cleared.
What's the question now? Possible to postpone the exam?
If you book the exams for May next year.
Yeah. Since you said it takes 7 to 9 months.
There are two levels of booking. There's the registration and then the booking of an exam center. Which one have you done both? Oh, yeah, that's easy. Before, they now have a new system where you have to first tell them you want to write the exam. Then you pay. Then you have to go and book your exam center because you have to book your center where you want to write. If that is the one, once you've done that, it's harder to change. So, because you've just registered, you want to write in May. You want to write in May, right?
That was.
Yeah, so which one did you choose?
I chose
May next year. Level 1. But it's ample time because, in fact, our level 1, which is about to start, correct me if I'm in October. Our next intake, we have a level 1 which is going on now. They are writing in November. If they don't make it in November, they'll write in February. Our next intake for level 1 starting in October next month. It is designed to prepare you for May next year. Are you with me? So unless if you were to join in October, then we have the full 7 months. You don't need to move the exam. Because we have October, November, December, January, February, May. We have the full 8 months to prepare. So the next cycle we are about to start, it is not even for February exam because we can see that it wouldn't be enough time. So if you have chosen May, you don't need to move it. And in any event, because you've already booked, you have not yet booked your exam center. When you have not yet decided the next booking, where you said to say, on this date, I want to write at this center, there is still some flexibility. So you're still long time away. Yeah? Yes. Yeah. Right now, you can still move it to August. Yes.
Yes. So, to confirm, are they only based on unstable opinion per day?
No. This is just the types of jobs. The work experience, when they say relevant, okay, any job you've done where you were processing numbers, you're working with data. Even as an accountant, if you've been a bookkeeper, as long as you can show that you process numbers and the numbers were used to make this. It doesn't have to be research analyst and all of this. It is valid experience. As simple as that. Okay, so it looks like, are there any more questions? I think you probably just need 20 minutes, right? Okay, I'm going to now, if you're still online, please give us 20 minutes. I'm now going to request patient to just talk through to the timetable when classes are starting. So as you leave, you're going home, you have it at the back of your mind. If you want to join, you join October. If not, there's another intake happening February next year. But the intake in February is preparing for November exam. Okay, but let patients just, okay, I'm going to pause a bit.